All right, so I'd like to welcome everyone to our agent training. My name is James Graydon, Relationship Manager for ProMED Healthcare Financing. I'm joined by Leyble. She's our Originations Analytics Manager. And we're going to be taking you guys through our products, our processes. We'll be answering questions as in-depth as possible. Again, if you have a question, feel free to type it in the chat box. I won't answer it until the end of the webinar, though. We'll try to be as thorough as possible. You guys will receive copies of this webinar training, and we're also recording this webinar training as well, so you'll be able to have a video presentation for your team members. And I guess I can just X this little thing out right here.
Yeah.
Okay. So let us begin. As you can see right here, we have our contact information. Feel free to jot that down. It'll be at the end of the webinar as well. I am always available to answer any questions that you guys might have. Shoot me an email or give me a phone call. I return it promptly and quickly, and I'll do my best. Megan's also available. She's got a couple extra things going on, more so than me, so feel free to make me your initial primary contact.
I'm pretty responsive, though, so feel free to reach out to me as well.
So why ProMED? Who are we? Well, ProMED is a premier alternative finance company with a focus on medical practices and healthcare businesses. We've been in the alternative lending space since 2007. We have the flexibility to finance advance and loan products against traditional electronic payment proceeds, as well as government, Medicaid, Medicare, and private health insurances. ProMED's proprietary underwriting accounts for specific and unique nature of healthcare reimbursements. We allow customers to obtain capital for all their business needs, including but not limited to growth, expansion, remodeling, purchasing of new equipment, and acquiring inventory. And ProMED has built its reputation for explanatory services by understanding the distinct financing needs of its clients and delivering the financing solution to meet those needs. What really sets us apart from the other lenders out there in the space is our focus on the health and medical-based niche and our ability to deliver a unique lockbox product. You have these other lenders out there that do a lot of daily and weekly payments into their clients' business checking accounts. But what ProMED can do is we can lockbox your clients' insurance receivables, hold a percentage of those receivables as they pass through towards repayment of whatever amount we advance. And we'll get more in detail into that as the presentation goes along. But for now, what I like to tell all of our referral partners is that if you see someone who's receiving insurances into their business, your first call should be to ProMED. We could probably get them a nice sum of money as well as a very flexible repayment product to go along with it.
I think the other thing that we kind of want to just distinguish ourselves from other companies is the fact that we have been around for so long. We've been in this space for an extremely long time, too. We've been focusing on the healthcare space for the last 4 years now. I've been with the company since 2009. James has been with the company for, is it almost 4 years now?
Yeah.
And we're kind of like a big family, and we try to treat our ISOs and our clients like they're our family, too. So if you have any questions outside of this, again, feel free to contact us. If your clients have any questions, we try to maintain an open door policy. We try and be as transparent as possible, if you will.
Yeah, definitely. I noticed a couple of names that have joined us for our webinar, and you individuals that had a chance to come visit us at our Long Island offices. You know, we're very straightforward. We tell it like it is, and you know, we always try to be as quick and as prompt with answers, and you know, honesty and integrity are something that we found ourselves on. So ProMED's alternative finance and loan products, it offers financial solutions for medical practices, healthcare companies, and any business that is health-related. So let's just take this a step further. A lot of agents tell me, do you guys just do doctors? Is it limited to a specific type of practice? No. It's any and all health and medical-based doctors, whether it's a heart surgeon, a podiatrist, a dietitian, a nutritionist, it doesn't matter. It's anybody that's health or medical-based with their own practice, or it's part of a larger clinic. It's pharmacies, it's hospitals, it's alternative type medicine, be it acupuncture, it's health spas, it's mental health, it's also animal health, it's veterinary, it's animal health clinics. it's durable medical equipment providers, it's medical transport. So it's a very wide-ranging industry when we say health and medical base. Not just your doctors, but it encompasses everything else that falls under health and medical base. I like to say that, hey, listen, if you guys get something that comes across your desk that has insurances or that sounds fitness or health or medical base oriented, it's probably going to be a great fit for ProMED. We're able to offer considerably larger financing amounts than other lenders because we use future insurance receivables, not just credit cards, to qualified clients. Our financing amounts are based primarily on historical monthly gross volumes, and a business practice will typically qualify for up to 100% of their monthly gross receipts. So again, you might have a deal that you take to one of our competitors and they say, can't do anything for them, they don't get enough deposits coming in on a monthly basis. But now let's look at those deposits. Let's say they're health insurances. That's a big game changer for us, right, Meg? We can pretty much go in there and say, listen, they've got a couple of health insurance deposits coming through and maybe they're getting 30, 40, or 60,000 a month from health insurances. That's perfect for ProMED. ProMED can get them the 30 or 60,000 that they have coming in insurance receivables, and if they have additional revenue coming on top of that, we can throw that into the equation. And that's basically going to allow us to give considerably larger amounts than our competitors. We can also fund up to $1 million. There aren't that many lenders that are currently in the space that actually will go up to $1 million.
The other thing that you have to keep in mind is that other lenders for the medical and health space are capped at a certain dollar amount. So just keep that in mind also when you're thinking about placing deals. You can just do the down button too if you want.
Okay, thanks. What can the funds be used for? Well, they can be used to bridge payroll, equipment purchase, practice acquisition, practice expansion, inventory supply, hire and train staff, advertising, marketing, upgrading, paying off vendor bills, or any other use that improves business performance and solves short-term financial needs. I can't stress enough how the categories that you guys are seeing listed right now on your screens, really it can be broken down by what specific industry in healthcare tends to have a need for those items. And what I mean by that is if you have a home healthcare business, a lot of times what they're looking to do is they're looking to bridge their payroll. They're bringing on trained staff and then they're dispatching them out. And they're billing Medicaid and Medicare. And those government insurances take much longer than the commercial insurances. In the interim, they have to keep their staff happy and working while they're waiting for Uncle Sam to pay them back. How do they do that? We provide them with the payroll bridging. And we can typically get them a large sum of money based off of the insurance volumes that they have deposited into their account. If you have an individual such as a pharmacy, they're normally looking to purchase large bulk sums of drugs at a wholesale rate and then resell that to their customer or their client base. So inventory purchase is going to be something big for them that they're going to be looking to spend their money on. And it's basically, from our standpoint, we like to tailor our conversations with our clients to sort of fit what need it is that they tend to have in that industry. So as a nice little tip for you guys with your sales teams, really find out what it is, the need that your clients' industries have, and really tailor your marketing campaigns to those needs. I think you're going to see a really good return on investment once you guys start talking about the specific needs that each of those industries have.
With the client base that we're dealing with, it's really important to kind of nurture the relationships that you're going to be building with them because ultimately, in the end, it will pay out. I mean, the more conversation, the more communications that you have with the healthcare providers, the medical staff, the doctors, the more they're going to appreciate you and the bigger the deal is probably going to be.
Yeah, and it's definitely you want to have a lot of knowledge about the type of business that they're in. For health and medical-based doctors, the pitch that's sometimes thrown around to the other industries doesn't necessarily work. You can't really call up and say, hi, do you need money? I'm going to throw money your way. You want to call up and say, hi, your home health, are you having difficulties bridging payroll this month? If so, we have a really unique program that's going to allow you to bridge your payroll, get a revolving line of credit, and really solve that issue right off the bat. You're never going to have to worry about that. No stress over making payroll. It's taken care of. When you can really speak to them in that specialized tone, that's when you're really going to see a real relationship foster. And speaking of which, percentage of our clients that renew, Megan, tends to be pretty high, right?
Yeah. I would say the majority of our clients do tend to renew, especially for the HCA product, because they're essentially not even feeling the payments. I mean, it's us holding back a percentage of their insurance receivables or their credit card sales every single day, and they're not seeing a daily debit. They're not seeing a weekly debit. We have the loan product as well, but those clients think, all right, I've already switched over my processing to this lockbox account. I think it would make sense for me to take more financing. I'm looking to hire more staff. I see what this money has been able to do for my company, and they are tending to renew. The majority of our clients are renewing, especially with the HCA.
So who do we target? Again, it's any medical practitioner or healthcare-related business. If the business accepts health insurances for payment, they are an ideal candidate for our finance products. If you see Medicaid, Medicare, I cannot stress to you enough how you should be pitching ProMED's healthcare cash advance. Because when Medicaid and Medicare make up a large portion of your clients' deposits, they will be having delays on reimbursements. It's a given. And they will be looking for money to bridge that delay that they get in reimbursements. It's only a matter of timing. I can't stress to you guys enough, those of you that have teams that are out there either making calls or prospecting for you. If you get a client and they send in bank statements and you notice Medicaid, Medicare, that's one that you definitely want to keep on your files for an extended period of time, because it will come a point in time to where delays do occur. Tends to be at the beginning of the year and sort of at the end of the year, depending on the industry.
Not only that, a lot of these clients also, they are seeing their reimbursements once a week. So a lot of other companies have a really difficult time wrapping their head around seeing 4 deposits a month, essentially, where we do not have that issue. We understand the companies that we're dealing with and why they would only be getting Medicare every Friday. So we do not have an issue funding based off of only 4 deposits a month.
Mm-hmm. Cash flow issues, businesses who experience delays in remittances, seasonality, or require funds to quickly bridge payroll or close on larger financing. Those are always fantastic deals for us to fund. There doesn't tend to be a lot of issues closing those because really they need the money right away. Mm-hmm. Another great thing is as we go further on the presentation, we're going to talk about the nice ability that we have to provide really good discounts for customers who pay back early. So that tends to fit nicely into those individuals who are looking to bridge into a larger financing. We can get pretty competitive with pricing and an early payoff for those customers. Businesses who can't wait for lengthy bank underwriting to seize a timely opportunity. Guys, we're pretty fast when it comes to funding, 5 to 7 business days. I like to say we can be as fast as the client can get us all the information that we need. If the client's very responsive, we can turn around $1 million in a week's time. So the big 3. I always get asked this question, James, what are the big 3 industries that you guys are funding? Home health care services, dentists, pharmacies. Those are the big 3 in terms of dollar amount funded. Just to give you guys an idea, if you were to go to an average broker shop that's in the alternative finance space, their average size deal is around, what, 25 to 30,000 or so?
Yeah.
Our average size deal as of last week, and we closed out several large ones, is about 130,000 for January, for the year 2016. Last year, I believe it was about 123. The year prior, about 116. They're only getting bigger, folks. As you can see on the list, some other industries, hospitals, physician groups, mobile, durable medical equipment providers, infusion centers, rehabilitation centers, pain and management. All of these industries, I mean, the smallest size deal that we've maybe funded this year, what, 60,000 maybe, I think?
Yeah, I mean, we go as low as 15,000, but the majority of our deals are over 100,000 at this point. It's few and far between that we're seeing anything really below 50.
Yeah, and I love to tell the brokers when they go to their shop, spend a little of your marketing bucks on health and medical-based deals. You don't have to shift your whole focus there, but just drop a little bit And I'm pretty confident that once you get the first deal funded, it's going to be well worth your return on investment. So some examples that we like to use, and again, we're going to be sending this presentation out to you guys, so you'll have this for your own reference as well. The challenge was in Northern, why don't you let Megan handle this, because I know she worked on this.
All right, so we had a Texas Home Health Agency, and they had a personal Chapter 13 bankruptcy about a year prior to sending in their application to ProMED. So because of that, all the banks that they were applying for loans from, they were getting denied left and right. So they didn't accept credit cards, and traditional merchant and cash advance was out of the question for them because of that. They had 2 daily ACH loans with traditional finance companies, but due to the inconsistency in insurance reimbursements for the home health business, the business that they were in, this type of financing was burdensome to the business's cash flow. So in their own words, my last merchant advance company offered $75,000, but I turned it down because they were normally withdrawing a fixed amount daily from our account. Paying 2 different companies turned out to be a burden, since regardless of what our daily income or expenses were, the daily recoupment was a constant amount. So ProMED stepped in, and we were able to offer them, I think it was, if you just go to the next page, please. All right, so we weren't able to get them to the $75,000, but we were able to offer them $40,000 off the bat. And we had taken a closer look and looked at their Medicare reimbursements. And normally with healthcare businesses, again, other cash advance companies aren't understanding these sporadic disbursements where ProMED is. So it only made sense for them to take the flexible term HCA ProMED Advance, and that was the solution for their problem. It addressed the agency's concern for oppressive repayment terms, as well as their inability to capitalize on opportunities due to a poor credit rating. In the 2 years since, the Home Health Agency has returned for increasingly larger amounts, giving them the ability to pounce on opportunities to grow their business as they emerge. So as you can see in the contract history, we got them from $40,000 up to $120,000, and that was in a year and a half. So we tripled what we initially offered them in a very short time frame, and we were able to help them bridge their payroll and get them the funding that they needed.
Very important to notice, guys, we funded this client 5 times. The agent received funding on this client 5 times, all from ProMED. A lot of times we get agents where they'll say to us, James, I'm going to take it to this shop because this shop is offering more in terms of commission. So they go to that shop, they get the deal funded one time, however, the client's not happy with the rate they received, they're not happy with the amount of funding that they received, and they lose the client. Over the course of 2 years, this agent that chose to fund this deal with us renewed them 5 times for a total of almost $400,000. The agent was very happy at this. I think the client is still on board with us as of the latest amount, and they're looking to renew again. Guys, we're able to do this because our pricing is very competitive. Our reimbursements to our agents are very competitive. And over the long term, our agents are making more money with us than they would if they had gone to another competitor with a deal to have it funded, where they could only fund it once, as opposed to ProMED. You're able to do the deal 5. Now it's going to be 6 times with us. I mean, we have some clients that have renewed with us, 10, 11 times?
Yeah, we have one client right now that's on their 12th renewal, 13th financing.
So it's amazing the type of relationships that we try to form here to really, benefit our agents as well as our clients. And I think one of the great things about ProMED is that, that you guys as agents might not necessarily see is that once you do submit the deal to us and we are able to get a quote and a contract out, our underwriting takes over. And we have a fantastic underwriting team here that forms a relationship not just to get questions asked about the financial stability of the company, but also to provide some consultative approaches as well. Whether that's talking the merchant through the deal and letting them know, hey, is this something that you can afford? Do you guys need us to maybe audit something or look at additional info for you? Or do you need a recommendation out to a new billing company? These are things that we can do on our back end that others really aren't willing to take that step to do because their focus is spread out over a wider base. So how quick can we be? The time elapsed between when we receive a signed application and 4 months of bank statements to the time funds are successfully wired to a bank account can be as little as 3 business days. Speed to close is heavily dependent upon you and your ability to motivate the client to move forward. As I like to say, the sooner they can get us the information that we need, the sooner we can have them funded. The more information we have up front, the faster we can work towards an approval. We realize that the perfect deal doesn't exist, and we more often than not can work around issues as long as we have a full story. It's very important. A lot of times you guys will see on the quote letter we send out, we have additional questions. I always encourage my agents, let's get a full story from the client. Let's find out the total picture. If everything makes sense and we can find a reason, it's reasonable, we can work around the issues.
Yes, and that is especially from an underwriting perspective. If honesty is the best policy, really. If there are issues with the client or there's a bit of hair on the file, it's better that we know up front and we know the real answer to our questions up front rather than having us find it out on our own. Only because if we find it out at a later point that an answer we were given initially isn't an honest one, it just puts a bad taste in our mouth. And it might not even be something that the client has necessarily lied about or the agent has lied about, but we just appreciate honesty for, deals that we were going to be funding and working with, clients we're going to be working with.
So how do we work? Guys, it's really simple. All we need is an application that's signed and filled out. It can be our ProMED application that we've provided to you guys, or it can be your application. The 4 most recent months of the business bank statements. Once we get that, you can email it to quoting@promedhcf.com. It will come to our quoting team. We have about 5 quoters in-house. They will get it. They will reaffirm that they received it from you, and they will begin the quoting process. Typically takes about 24 hours to receive a quote from time of submission. Once you guys get the quote letter, we'll have required items that we need. We'll show that on the next slide. The client selects the preferred quote offer, or new quote is prepared. Contract is created and sent directly to the client. What I like to say, guys, is that if you ask me, James, qualify my client for the maximum dollar amount. Let's say it's $100,000. What that means to you is that any amount from $15,000 up to $100,000, ProMED can provide them with funding for that amount. There is room for negotiation on all quote letters that are sent out. So some agents might, get a little upset. The client didn't really want to go for it, thought it was expensive, so on and so forth. We can always negotiate. Again, that quote offer is just the first offer that's out there. And if we have to go back 3 or 4 times to redo the quote, or maybe a different dollar amount, or just percentage holdbacks, we can do all those things.
Yes, the quote letter is pretty much the jumping off point for starting negotiations. If there is anything that the client does not like on the quote letter, just let us know what it is. Is the holdback too high? Is the daily or weekly debit too high? Are they interested in a bit of a longer term, a shorter term, a lesser amount, a smaller factor? It's better to just let us know and see if there is anything that we can do.
Signed contract and required items are received. Underwriting takes place. Deal is officially approved or declined. This, number 4, is incredibly important. A lot of clients tend to think that when we send the contract out and they sign the contract, it's a done deal. That's not the case. The contract that we send out, I guess, should be almost sort of viewed as a good faith offer. Mm-hmm. Would that be a good term for it?
Yeah, I would say 9 times out of 10, the terms on the contract do not change. Honestly, it's really about 98% of the time, the terms on the contract do not change. However, people assume that once they send the contract back that everything is done, and they forget that there are the additional required items that we need to look at and that underwriting needs to check out, do all the checks and balances to make sure that everything, is still feasible in terms of offering our financing. So it's just very important to know that underwriting is done after the contract is received.
Yeah, once underwriting gets back that information, depending upon the size of the deal, that's really going to determine the depth at which underwriting is taking place. So if it's over $75,000 or so, we're asking for financials, we're asking for tax returns. I believe it's over $100,000, we ask for a signed tax guard. And I mean, we're digging into those financials. We're cash flow based lenders, so we want to see that there's positive cash flow. We want to see that there's at least neutral income or net positive income over the last 2 years. If they have tax liens, depending upon the dollar amount of those tax liens, our overall strategy for tax liens has been, look, if it's over $150,000, at least 6 months on a payment plan. If it's over $150,000 though, I'm going to tell you guys right now, the deal becomes really difficult to go to funding. And that's because what we're looking at on our end is we have to know that our client can support our debt servicing costs as well as paying back Uncle Sam. Because when push comes to shove, we don't want a situation to where the client says, well, let's see, ProMED, unsecured, uncollateralized, I'll just stop paying them for a few months, because if I stop paying Uncle Sam, he cuts off my Medicaid, Medicare reimbursements, and my company's done.
Or vice versa.
Or vice versa.
Yeah, they keep paying us, and then they don't pay their tax liens, and then their accounts get frozen, and then they go out of business.
Yeah. So for us, that's, tax liens are always a big issue. If it's under $150,000 now, and they've been on a payment plan for at least 3 months, the deal becomes more doable. Again, we're still going to scrutinize it more. It's not just being on a payment plan for your tax liens. I can't stress that enough, because we see deals where individuals are on payment plans, but you have to be current on your current taxes. Mm-hmm. It doesn't do any good to pay taxes from 10 years ago, but then not pay your taxes from this year. Once the final underwriting is done and we receive an approval, we will do a welcome call with the client. The funding process is fully explained to them at that point in time, and then funds are wired to the client's operating account. We also do a site survey. That's not included. That's in between steps 4 and 5 that takes place. All of this literally takes, 48 hours to maybe accomplish?
Yeah, honestly, underwriting typically moves very quickly. Again, it's as fast as the client can get us all the documentation that we need. So once we get all those docs back, I would say 48 to 72 hours from underwriting to closing.
And right here, guys, we're looking at our typical quote letter that we send out to our clients. Basically, we have the loan options on top, followed by the advance options. And we'll get more into detail as to what those 2 items mean for those of you who are new. Our loan options are options where repayment is collected over a fixed period of time for a fixed dollar amount via debiting from their business checking account. The debiting occurs either on a daily basis, that's Monday through Friday, not Saturday, Sunday, or any bank holidays, or on a weekly basis, the day of the week that can be chosen by the client. As you can see here, we list the amount, the purchased, which is how much they'll be repaying us, the payment interval, daily or weekly, the payment amount, the expected duration, which in the case of a loan will be a fixed amount, a fixed period of time, the number of payments they can expect, the processing fee, and the origination fee. Underneath those, we have our advance options. These are for either our credit cards that we're going to be lockboxing or our insurances that we're going to be lockboxing. And as you can see, you have the amount, the purchase, the specified holdback percentage. For those of you who might be newer to the industry, that is not the interest rate that's being charged on the money. That is how much of the payment types captured we're going to be holding. So if they only accept Visa and MasterCard transactions into their business checking account, we would only be holding 15% of the Visa and MasterCard. If they accept Visa, MasterCard, Medicaid, Medicare, and Aetna, we would hold a combined total percentage of 15% of those 3 items towards repayment. We can also give the client an option to choose what percentage amount they would like to be held from any of those specific payment types that are being captured. But that caps at, I think, 50%, right?
Yeah, we really don't like to get the holdback percentage too high, just because, if they lose one of those electronic payments, then it's impossible to get them to repay in the expected duration. Now, normally, if we are capturing multiple electronic payments, if they want to only take Visa, MasterCard, and Aetna, we would just up the holdback percentage a little bit so that we would only be taking those two and not be taking Medicare. If they only wanted us to take Medicare, then again, we would just jack up the holdback percentage for Medicare. It's all a case-by-case basis. Sometimes Medicare and Medicaid takes a bit more time to switch over than some other insurance deposits, so clients are sometimes hesitant to switch those over. But if they aren't, it's probably best to take any electronic payments they receive because it'll lower their holdback percentage significantly.
Definitely. One other thing to add, expected duration, that can stretch out depending upon how their cash flow volumes go. If they have a decrease or if there's a delay in their Medicaid, Medicare reimbursements, it could stretch out past the 8, 10, or 12 months. It could, you know, theoretically, what's the longest you've ever seen stretch out?
That's a bad question. But yeah, there are no penalties to having it stretch out a little bit longer.
Yeah.
Now, we're saying expected duration because we are looking at the last 4 to 6 bank statements, so we are expecting them to repay on schedule with what they have been receiving for those last few months. But as James said, if it does take a little bit longer, they are not penalized.
Yeah. I like to, whenever I'm pitching an offer to a client, if they're very, you know, caught up on the fact that, James, I want a long term, I want something 2 or 3 years, I say, look, here's what I can do for you. I can give you something that's at 12 months and I'm holding a percentage of your cash flows. You're only going to pay me when you can afford to pay me if we do it via your cash flows. It's not going to be a situation to where for 2 to 3 years or however many years you're looking for, every single month you're going to be hit for a set dollar amount that you might not be able to afford that certain month. Because after all, you're asking for a longer fixed term because you want that payment to be lower. So there are specific cash flow issues that are underlining why you're asking for that 2 to 3 year period of time. So you know what, Dr. Joe, let me give you something that's only going to require you to make a payment when you actually have the money available to make the payment. And that's one of the huge advantages to really funding with ProMED is that ability to have a flexible repayment. A lot of times your clients who are asking for that longer term, they're really looking for flexibility because there's cash flow issues there. I'm willing to bet 9 times out of 10 if you look at their cash flows and they're asking for that 2 to 3 year term, it's a cash flow issue that's there that can be addressed by the flexible repayment.
Oh, and just to point out that the required items, the steps that we request are typically all listed on the bottom. If there are additional steps or questions, then they'll just fall back onto the right side of the page.
Yeah, definitely. These are the items that we really need to get back in a timely manner to really hit that 3-day funding mark. If we can get back all the required items and your client can just send an email that answers all the outstanding questions, we can fund them pretty quickly. What you're looking at right now is our contract. We have the future receivables sales agreement, and then we have a business loan and security agreement. So the future receivables sales agreement, that is the one that deals with the lockbox or the holdback percentage. On our contracts, you'll see purchase price, amount sold, and the discount that's charged. Or another way to say it is the cost of purchasing the money. It's pretty straightforward. There's nothing too crazy that's in our contracts. I would say 9 times out of 10, our clients pretty much sign the contract, they understand it, reading it themselves, and they send it back.
Yeah, there's no sticky jargon stuck in the middle of it. It's all very straightforward. I mean, this is the amount that you're getting, this is the amount that you're paying, and whatever they agree to be the either daily or weekly debit or the holdback percentage.
Exactly. On the right side, we have our loan agreement. It's amount of loan, funds provided to borrower, the payment schedule, the total payback amount, total dollar amount loan will cost, and fees. And we put that total dollar amount loan will cost to be even clearer for our client. So they know exactly the cost. They'll know exactly the fees that are being laid out to them. Again, we try to be straightforward. We don't want a situation to where we've had discussions with the client. We get to the end and then the client says, wait a minute, you're giving me $10,000, but you're charging me how much in fees? That's not what we're about. We're about letting the client know right up front, this is what comes with the money. This is the value that's associated with the cost. And we list it out for them very clearly. This way they understand, and there's no surprises at the end. And we find that our close percentage tends to be much higher when you take that straightforwardness approach with clients.
Also, if we send you a contract, make sure that the client initials every single page. We get so many contracts back with one page not initialed, and then we have to send the contract back to them, and then that delays it even longer. So make sure they initial every page.
I will second that as well. I can't. That is, especially as we approach a timeline that we're trying to meet for the client, and we find out that they missed initialing page 5.
Yeah, or a signature, or a date.
Or a signature or a date.
Yeah.
It's infuriating, so please make sure that they date and they sign all pages. So product overview. On the left-hand side, we have the healthcare cash advance. Again, that's the product where you put the lockbox in place. We hold either a percentage of their insurances or their credit cards. Client can choose which insurance types to use or which credit cards we hold and the percentage we hold. No fixed term, no fixed payment amounts. Everything scales. The client pays when they can afford to pay. The business loan, terms are anywhere from 3 to 18 months, daily or weekly payments, early repayment discounts. We can subordinate to bank loans, SBA, or factoring agreements. Just want to add, there is early repayment discounts available on the healthcare cash advance as well as on the loan amounts. We can either do it one of two ways for your clients. Some clients just like to hear verbally, hey, is there a penalty if I pay you guys back early? The answer is always no. Other clients like it in writing. We can actually provide it to them in the contract, the dollar amount that they will have to pay us back if they decide to pay back early at this specified date and time. So we can do it either way for your clients, just to sort of benefit them. And just a visual representation of the healthcare cash advance, specifically the lockbox and how the lockbox works. We have, before the insurance switch, you have all your insurances, United, Healthcare, Medicaid, Medicare, Humana. They go straight to your client's business checking account. After we establish the escrow lockbox, the insurances first hit the lockbox, a percentage amount is then sent to ProMED, and the remaining amount goes directly to your client. It's very important to note that the lockbox is in your client's business name. They actually have full control over the lockbox, so they're not losing control over their insurances. The only thing that's happening is that we're establishing a mechanism whereby a percentage that hits that lockbox account gets sent to ProMED and the rest goes to your client. They will have to switch over their insurances into that lockbox. And a popular question I get asked is, James, what's the normal time frame to get insurances switched over?
Okay. So now our closing department is really, really good at holding our clients' hands through this entire process. Credit cards, they take a day or two to switch over. Now, health insurances, those can vary. Now, Blue Cross Blue Shield, United Healthcare, those can switch fairly quickly. Those can take a few days, maybe a week. Medicare, Medicaid, those might take a little bit longer. We have seen situations where it's taken up to 4 weeks. Now, I know you're probably thinking, wait, so my client won't be able to get funded until 4 weeks from the day that they set up the lockbox? No. We can actually offer an interim ACH debit where we will fund them, do a temporary debit in their account, I think the temporary one has to be daily. And we will do that until the insurance is switched. At that point, we will stop the debit, and then we will start holding back the specified percentage, if it's 10%, 15%, whatever it is. Now, the lockbox, as James had mentioned, it is set up under their name, and the client is actually required to do all of this switching themselves. But again, our closing department will show them exactly what they need to do. I think it's pretty much 2 pieces of paper that they need to send to their insurance companies or their credit card companies just to get them to redirect those payments. And then it's done. So the process of setting up the lockbox is very quickly. The switch for the insurances sometimes can take some time.
Yeah, our underwriting team also pretty much walks your client through the whole process. Mm-hmm. Really, we provide them with papers, they send it into their insurance company, and that's it. We also provide monitoring of the lockbox account too.
Yes, our closing department also sends out monthly statements. But if the client wants daily statements or weekly statements, we can send those up as send them out as well.
It'll allow basically them to reconcile everything that's going into that lockbox for their own accounting purposes as well. So our cash advance, it's ideal for companies in need of a fast funding option with very flexible repayment terms based on insurance reimbursements. Great for anyone that accepts insurance payments, fast funding in about 3 days, flexible repayment period, one-page application, 4 months of the most recent bank statements. Repayment is tied to insurance receivables captured through a secure escrow lockbox. There is no fixed repayment period. Companies pay at the rate they collect. If business slows down, repayment slows down. Again, it's great for those clients who are not looking to get hit with a daily payment option, but are looking for something that can sort of keep the fixed costs down and can sort of really help out their cash flow situation. The cash advance is a great selling point. Our business loans are perfect for healthcare companies looking to get a loan just like one from the bank. We have higher approval rates, of course. There's less paperwork, and no collateral is required. Anyone that may not accept insurances in the health sector or is looking for a structured fixed repayment period is an ideal candidate for it. Terms, 3 to 18 months, daily or weekly payments. ProMED must take first position. What does this mean? This is really important. A lot of times for our agents who are in the industry, they will say to us, hey James, how many positions can you take out? Or what's the total dollar amount of the positions you can take out? And what that basically means is if you have a client that has received alternative financing from a ProMED competitor, the total dollar amount outstanding cannot exceed $100,000. And the client must net at least 40% of whatever we provide them. So there's 2 qualifiers to this. The total outstanding dollar amount has to be under $100,000, and they must net at least 40% of our funds. If they meet both those, we can get them the funding. If they have a bank loan, an SBA loan, or a factoring agreement, we can provide them with funding, taking that second position to that senior debtor. That's not a problem.
Yeah, let me clarify this a little bit. We can take second position to banks, bank loans, SBAs, and some factoring. We have to look at the factoring agreement that they have with their factoring company that they're using, just to make sure that they aren't in breach of the contract by taking our financing.
That's a great point.
So most lines of factoring we are fine going behind, but some we have to just get a copy of the contract to make sure that it's okay with their initial agreement with them.
Yeah, that's a great point, guys, too. For those of you who are brokers on here and fund with other competitors, a lot of the other finance companies, they'll fund under factoring agreements where technically if you were to look at that factoring agreement, it's illegal for them to do that. And they can, there could be serious legal issues there. We actually take the step of actually looking over the factoring agreement and making sure that, hey, it's okay for your client to get money from us, and that if they do get money from us, the broker's not held liable. So it's just something we do. We do our due diligence when we're funding these deals. It's a tiered process, ensures that there's a product for everyone. As you see when we'll get to our pricing guidelines, our loan product is very flexible in terms of the minimum credit score requirements that we can provide funding to. Discounts for early repayment. We offer this on our cash advance product as well. We do it on our loan also. 3 days or less in terms of funding, 1 page, 4 most months of your recent bank statements, and we can provide funding to your client. So both of our products are broken down into 3 tiers. We have qualified, select, and preferred. And I think I'll let Megan take over on sort of what the differences are in between the tiers.
Okay, so the qualified is kind of the lowest tier that we have, and those are the clients that are, the lower credit scores, the 1 year in business, haven't been around for a very long time, don't have much of a history for us to base our financing off of. Those are the qualified clients. Whereas the other end of the spectrum is our HCA preferred. Those are more of the bank qualified clients that are looking for financing tomorrow and not in 3 months. So for the qualified, the term ranges are for about 3 to 10 months, 3 to 15 on the loan. The factors are ranging anywhere from 8% to about 40%. There are no fees for any of the HCA products, and then you'll see the fee structures for the loan products. And then there are just different ranges for the credit scores and time in business on the bottom. This chart is very self-explanatory. If you just look at where your client lies, especially in terms of time in business and then their credit score, approximately, whatever they think it might be, and you'll see what product they will fall in.
Yeah. And I just would like to add, guys, that these aren't hard, set in stone guidelines. It's just a broad, just to give you guys a broad understanding of what your client could potentially be looking at in terms of cost. I will say that the two big indicators of cost really tend to be the time in business and how long they want to have that money out there for. The longer term that they're looking for, specifically on the loan side of things, the more costly it's going to be. The shorter the term, the less costly. If they've been in business for 8 years as opposed to just 1 year, that's going to have huge ramifications for the cost as well. So just some things to keep in mind. Max competitor payoff, you can see across all tiers, is $100,000. So keep that in mind in terms of if you have clients that have outstanding positions.
The other thing to keep in mind when looking at this is that the factor ranges are without commissions built in. So those are pretty much the floors for any of those products. They are, at the loan preferred rate, the 5% rate for that is really 13% if you're building in an 8% commission. Okay, so just remember that.
Now, additional documents required for a quote. Again, as I've been saying before, just an application for most recent months of the business bank statements. Additional documents required in underwriting. You have your lease agreement, copy of a voided check, business license, proof of liability insurance, copy of the owner's driver's license, proof of ownership, whether it's tax return, Schedule K-1, or Articles of Incorporation, a payoff letter for existing financing when applicable, the last 2 years of financials and tax returns on all deals $75,000 or greater, and a signed tax guard release form on all deals $100,000 or more. Additional documentation may be required on a case-by-case basis. So how much does it cost? Unlike traditional bank loans, both our loan and healthcare cash advance products feature a set fee repayment. This means the amount you repay is set and cannot increase over the life of financing. Depending on your specific qualifications, our rates can range from 5% to 45% of the loan or the advance amount. How long does it take to get your money? You'll receive a qualified offer within 24 hours, funding within 3 business days. Is there any cost to apply? There is no cost to apply. What can I use the money for? As stated before, anything that's going to help to improve your business, whether it's advertising, office renovations, acquisitions, bridging payroll. You're free to spend the money on whatever is best for your business. Will ProMED financing hurt my credit score? Absolutely not. Do we even appear on the credit report?
We do appear on TransUnion reports, but if you're running Equifax or Experian reports, we will not show up on those. But that doesn't mean that we are not still pulling all 3 of those. I think for deals 100 plus, we are pulling all 3 bureaus. But for anything lower than that, we're typically just pulling Experian.
What do I need to submit for your qualifications? Again, application, bank statements. Are there any prepayment penalties? There are no prepayment penalties associated with taking our money. If you ask for an early payoff, we will actually provide you with a discount. The discount tends to range, would you say, anywhere from about 6 to about 10%?
Yep, yeah.
So from 6 to about 10% discount on whatever their outstanding balance is what they can look forward to receiving. If I have other financing, can I still qualify? Our products are designed to work alongside traditional financing. As long as you meet our requirements, we can still provide you with financing without affecting your other obligations. I don't accept insurance. Can I still qualify for financing? Yes, our loan product does not require that you accept health insurances. We are also able to offer a cash advance product if your business accepts credit cards. And again, any deals that you might have, you can acquire that application, your 4 most recent months of bank statements, and email it over to quoting@promedhcf.com. We will let you guys know right away that we received your email, and we'll have a quote to you within 24 hours. You can also apply on the web. It's a simple 6-step process that allows you to execute an application and drag and drop documents uploaded.
If you do have clients that apply on our website, though, just make sure you email us and tell us, heads up, this client's going to be applying on your website. This is a referral from me, so that we know to give you credit if the deal does fund.
Oh yes, that's a really great point, Megan. Let us know if you're just directing your clients to apply via our website. Also, on any deals that you guys do submit to us that we renew, you are notified immediately via our system that it is up for renewal. So we keep you guys posted throughout the life of their repayment, how they're doing, if they slow down or if they increase. I know a lot of times we get our agents wanting to know, hey, you get so-and-so a cash advance product. How are they doing? Are they on pace to be repaid at such and such date and time? And we can provide you with all that information. We're a proud member of the following associations. So one of the great things is that you guys can know that when you do business with us, integrity, that's a huge part of who we are and what we do. And we wouldn't be members of these associations without that integrity. We're actually invited to attend their yearly conferences. I think we're going to CASA in 2 weeks' time or so. They wouldn't be allowing us to come out there if our reputation wasn't excellent within the financing space, specifically the alternative financing space. So I encourage you guys to, if you haven't tried to submit deals with us or if you haven't done business with us before, definitely give us a shot. And finally, any questions that you might have or comments, you can email either myself or Megan. You can call us up with any questions that you might have. This is the time now where if you do have questions, feel free to type it in the chat box and we'll take them right here. If not, if you want to do more of a phone call, personal, give us about 30 minutes from now. We'll be at our desk. Mm-hmm. I do see that we do have a question in the.
I think if you do the questions box at the bottom, do that, and then but right above that, right next to the X, to the left of it, I don't know, on the right side, up a little bit, yeah, up a little bit more, to the right, a little button, back.
Okay. So we got it. All right. So I have to go to another meeting now, unfortunately. Can you please PDF or PowerPoint these selling points to me after the meeting? And of course, I'm going to do that for you, Marvin, definitely. Do you offer a white labeling program for ISOs? Also, do you still offer website for ISOs? We don't do the website labeling anymore. We did do that, but we had so many requests come in that we just couldn't keep up with the demand. So we're not going to be doing that anymore. We do offer white labeling for ISOs, but we have to see a deal submitted, correct?
Yeah, I think there has to be a deal that is quoted.
There has to be, excuse me, so there has to be a deal that is quoted. We just have to get a quote letter out on the deal. Once we get that, we can provide you with white label marketing. It would be a flyer, a trifold, and if you do submit a deal with us and it does fund, we can actually talk more in depth about doing co-marketing and co-branding and mailers, email blasts together with ProMED also. And as I was stating before at the beginning, we're going to be sending out this training guideline to everybody, so you'll be able to have this exact webinar. We also recorded this webinar, So you'll be able to have that recording available. We'll get it uploaded to YouTube. And I don't see any other questions coming through. You can type the questions in the chat box again, or you can give us a call. We'll be able to answer them for you. I hope you found this very informative. We try to do these once a month. I encourage you that if you guys have sales teams, definitely tell them to sign on to this, or get the word out about it. We do it once a month live, and we'll have the recording up there for anybody who can't make it, that they'll be able to view it. And I don't see any other questions, so I'm going to consider that there are no other questions.
Yeah, we are typically doing these toward the end of each month, but if you guys have teams that you think that you'll be doing a mass blast out and you want to train your sales teams on it, we have no problem sitting down and going over any questions or doing the training again. So, just reach out to us and let us know if you want to do that.
Also, that's a great point, Megan. Also, if you're in the tri-state area and you do have a sales team that you maybe like us to come and do a presentation in person for them, we can do that. We travel to visit our brokers in the tri-state area. It's not a problem. Or if you want to do via a webinar one specifically for your sales team, we can do that. For some of the smaller brokers out there, I give you this to use this as an opportunity to have a sales training program on ProMED products. I think a lot of the information also carries over to the other industries they might be targeting as well. There's a trend now in alternative finance to have a more consultative approach as opposed to an approach of just calling up and saying, do you need money?
Yeah.
We try to go the professional route and say, listen, really know your client's business, know what their hurting pains are, and really speak to them and speak to the solutions that you can offer them. And with that, I will email everybody, and I thank you all for attending.
Yes, thank you for joining us.
Take care, guys.